But let's put the spotlight on that entire sector and ask our experts what are their views. We have Kunal Bothra as well as Siddharth Sedani joining us on the show today. A very good morning to you, Kunal, as well as Siddharth, and Happy New Year to both of you all. I've not been able to wish you, Kunal, because you were also on a extra extended long weekend, just like the US markets. And Siddharth, we are meeting for the first time in the new year, so Happy New Year to both of you all. But Siddharth, let me come first to you. And what do you make of this renewed vigor that we're seeing in the insurance pack? Of late, we've seen good up move come in, be it general insurance or the life insurance. Also, you have LIC. You have brokerages that are initiating coverage on this one with a buy rating, and they have a target of around 1,000 rupees per share. So, where do you see the insurance sector? Do you think that this will be the theme for 2023 and a re-rating is just about to happen?
Well, good morning, Cheryl, and Happy New Year to you too, and Happy New Year, Shrishti. Well, with this, insurance space has been an underperformer in the last 1 year. Now we've been seeing some kind of a performance, but let's not get carried away. This is a slow moving sector, and we are positive on the insurance space, specifically on the life insurance space, because the fifth largest market, and looking at the wide distribution network and the position to deliver robust growth, we are seeing improving business margins here in the life insurance space, although the penetration is too low, 4.5% compared to the world at 20-25%. So we have a lot of ground to cover. Here we are very positive on two companies and two counts, that is SBI Life. We have a target of 1,400 rupees, along with followed by HDFC Life with a target of 780. So life insurance space is what we are very positive on. We believe value of new businesses can grow by 20 to 25% CAGR for next 2 years. So life insurance space which we have eye on.
Life insurance space is what Siddharth is betting on. As you can see it on your screen, the markets are now near the day's lowest point, with the Nifty below that 18,100 mark. But in this market scenario, given the way how the markets are panning out in the initial days of the year 2023, Siddharth, what should retail investors do to keep their wealth protected in this year?
Well, Cheryl, this year also can be as difficult year as 2022 can be a rocky year. But in this year, one has to keep that patience going. I think second half of this year, we have a lot of triggers in front of us. First half of the year, you have to think and accumulate good quality companies and stay put with patience with those companies. I think you will make good wealth creation opportunities in the second half of this year.
The second half of this year has good opportunities, and for wealth creation you can be looking out on that front. But let's move on. Question that I have is coming in from Nino. This one is for you, Siddharth. He's saying that he's doing a SIP in CDSL with an average cost of now which is around 1,100 rupees per share. He's asking if it's a good strategy to continue with SIPs in CDSL for a period of the next 3 years.
Certainly, yes, because the kind of market pie is expanding over the past 3 years. We can see a further expansion in terms of demat account opening. And as and when today CDSL is at 7 crore plus demat accounts, world's second listed company, India's first listed company in the depository space. So we are quite positive on CDSL, and you can continue with the SIP for next 3 years. There is a lot of growth which we are anticipating from here on.
Now the next question is from Siddharth. Denny Matthew is holding 2,000 quantity of UPL from a price of 759, and the stock is seen to be drifting lower since the past couple of months. He wants to know the short-term view on this particular counter.
Well, with a short to medium term perspective, we are positive on UPL on the count that it is the fifth largest agrochemical company in the world, and we are seeing traction in the global markets, especially on the South American markets. Volumes has been coming. We can expect a good numbers in this December quarter, followed by March. So please hold on with 3 to 6 month perspective. It's a quality play in the agrochemical space.
All right. The next one that I have is coming your way, Kunal. But let me take this one to Siddharth, and this is from Parth. Ambuja Cements or Ultratech Cement? Out of these two, which one is a better buy for the long term, Siddharth?
Ultratech Cement, because we believe that the kind of capacity addition they've been doing is phenomenal. Industry has been growing by 7% in terms of capacity addition. Ultratech is growing by 10%. So undoubtedly Ultratech Cement.
Okay, Siddharth, the next question is for you. Subrata Ghosh wants to enter into some counters that he's looking forward to. Wants you to pick up one: HCC, HFCL, and Astra Microwave. Which one will be you choosing?
Is it for me?
Yes, yes, Siddharth. Please go on. HCC, HFCL, and Astra Microwave.
Astra Micro is one of the stock which can be picked up from here on with a medium-term perspective.
All right.
Welcome back to Buy Now, Sell Now, and let's keep it going with your stock queries. And Siddharth, coming to you, the next query that we have is from Madhuri Balaji. She wants to know the fundamental take on Polyplex as well as Jindal Polyfilms. Her investment horizon is for the next 3 years. What will be the entry price as per you, where she can look to enter in these counters?
Well, General Poly, I don't have a much of understanding, but Polyplex, yes, definitely at the current price one can look at accumulating. But let's understand that this company has been falling since a quarter or so. So, in a piecemeal manner, staggered manner, accumulation is what advised from here on. And with a 3 year perspective, definitely it's a great stock to be in, where margins can expand further. And we know that raw material prices are cooling off a bit, which is positive for Polyplex. So, Polyplex can be looked at with a systematic investment.
Okay, Siddharth, the next question is for you. Advait from Mumbai wants to know, is this a right time to enter into Samvardhana Motherson for a long-term view? What will be your advice?
Yes, Motherson can be entered at the current price because auto ancillary has been seeing traction because the OEM businesses have been moving well. We are seeing some kind of a disappointment on the two-wheeler space, but on the passenger vehicle space, it's been positive. If you look at the sales numbers also, especially on the commercial vehicle side. So Motherson can be looked at this point of time. Added to that, Uno Minda is also one option can be looked at, followed by Gabriel. I think auto ancillary pack looks quite interesting.
All right. The next.
Okay, Siddharth, Vincent is looking to invest into three counters, that is L&T, Siemens, and Bata India. We have already touched upon Bata India. Her investment horizon is for the next 3 to 5 years. So between L&T and Siemens, what will be your pick?
Well, I would like to pick two stocks from this. Three is L&T and Siemens because of the biggest reason that capital goods has been buzzing big time. Siemens has its own story, got 200 Vande Bharat order. That is also big traction as well as railways. A lot of orders been coming to them. L&T, as we know, proxy to the economy, infrastructure play. I think it's one of the best stocks in the infra play, looking at the guidance of 15% revenue for next 2 years. So L&T and Siemens is very good for next 3 year perspective.
Since the previous query to you was very easy, I'll give you a tough one now. This one is coming in from Siddesh, and this one is for you. Siddharth wants to know your long-term view on Map My India or CE Info as you know it.
It's a very good stock to hold on, although since last 2 months it's been relentlessly falling on the back of a poor set of numbers below expectations. But the kind of business and the market share they have, 98% of the India's roadmap is what lying with Map My India. A lot they are into B2B business, tied up with Maruti, BMW, PhonePe, Uber, Ola. So it's a very beautiful business to be in. Although little tepid as of now, but this is the right time to accumulate. And with a 1 year to 3 year perspective, we have a target on Map My India of 1700 rupees. Hold on.
Okay, Siddharth, the next one is from Sunny once again, but he's from Japan and he's a long-term investor. He's holding 750 shares of Crompton Greaves Electrical from a price of 355. Wants to know, is this a good time to average out this counter or wait for further dips to average?
So I think this is the right time to average. You can again average if the stock further falls 5 to 7%. Good business to be in. Leaders in the fan segment. A lot of innovations coming on the lighting side of the business. And home decor as a segment has been doing good, and Crompton plays a vital role in this. So I would prefer that you can average it out at the current levels and hold on with a 6 to 9 month perspective.
Okay, one more coming your way, Siddharth. Hari is writing to us from Abu Dhabi and he has 200 shares of Suven Pharma at a price of around 272 rupees per share. He wants to know if this stock is good to hold or what should he do, because there are news reports that this uh, counter may be taken over by some other firm altogether. So he wants to know, barring the speculation, does it make sense to stay put with Suven Pharma?
It's a good business in the CRAMS part of the spectrum, and they are expanding. They have a capex right in front of them, so you can hold on. Don't average or don't increase your position from here on. If you want to really increase your position in the same space, that is pharma, look at Divi's Lab, the largest of the API play. India imports 80% of the API. They are the import substitute for the country. Divi's Lab is the play to look at in the pharma space from here on.
Okay, so that the next question is from Venkat Ramani from Bangalore. He wants to know, is this the right time to accumulate Kalyan Jewelers for 1 year period?
Well, I'm not that positive about Kalyan Jeweler. This business has not been doing good. In fact, in the same spectrum of the sector, I would say Titan can be a good option to look at rather than Kalyan Jewelers.
All right, I'll give you a breather then, Siddharth. Let's.
Okay, so that the next one is from Babu Iyer. He is holding 2,000 shares of Bank of India at a price of 80 rupees. In the past 6 months, the stock has already shown a move of over 100%. So is that a hold at these levels and continue to ride on to the profits, or is that a sell?
Well, I would advise that book profits and take the profits off the table. If not 100%, then at least 50 to 70% take the profits and invest into some of the private banking space like ICICI Bank. If you want to go to a smaller mid-cap private banking space, Federal Bank is also one good stock to look at. So book profits, come out and get into the private banking space, ICICI Bank or Federal Bank.
All right. This is a bit of a longish or maybe pointed question that is coming from our viewers for you, Siddharth. And this one is from Sagar, and he's asking about Craftsman Automation. He wants a panda view on this counter, but what he wants is the fact that he wants to know what's your view about the growth and the earnings trajectory for this counter, because he's holding this one from the IPO levels. He's also added more at around 1,300 rupees per share, despite everyone saying the stock is okayish and the valuations are expensive. But the stock is now doubled or more than it's gone more than 3 times higher. So he wants to know, what are your projections for this one, earnings wise, growth wise, and is it the best one to hold in that pack?
Well, first of all, congratulations. You've been holding it since a long time now, and keep holding it, because we can expect a 35 to 36% CAGR profitability growth from next 2 years. It's a very good company on the powertrain component side for the auto ancillary play. And stay put with this. Added to this, please add Gabriel also. One stock which is addressing to all the segments of the OEMs, likes of two-wheeler, maybe passenger vehicle, commercial vehicle. Vande Bharat shock absorbers has been manufactured by Gabriel. So alternatively, Gabriel also you can look at for investments.
Moving on to the next query, Siddharth, once again for you. The question is from Bhaskar. He is holding 200 shares of Vijaya Diagnostics and sitting at a loss of over 20% now. Wants to know what to do at these levels. Will that make sense to average out or sell and move on?
I think move out is the good option. Don't go for the opportunity loss. If in the same segment in the healthcare space we are positive on the hospital business compared to the diagnostic. Max Healthcare is one play which you can look at. I think you can cover your losses through this. We have a target of 504 with a 1 year perspective. Switch over to Max Healthcare.
Okay, and with that, let us kickstart with the rapid fire then. Jayashree has 25 shares of TTK Prestige at a price of 900 rupees per share. Siddharth wants to know, does it make sense to average right now?
No point of averaging as of now in this segment. In fact, you can look at some of the FMCG plays like Tata Consumer.
Okay, Siddharth Vinay is a long-term investor with 12 to 24 months of investment horizon, holding 500 shares of Hindalco at a price of 380.
Hold on with the Hindalco, added an investment in the steel space, then that is Tata Steel.
Okay, not sure if you tracked this one, but Doner Industries 500 shares bought at 85 rupees per share. Wants to know whether hold or sell. That's from Seema. It's for you, Siddharth.
I think one can come out of this and look at AB Fashion, Aditya Birla Fashion.
Okay, Siddharth, another banking counter query that is from Chandra. Punjab National Bank holding from levels of 33. What to do? Hold or sell?
Book profits.
Okay, long-term view on Share India. KJ Singh is asking, any idea about this one, Siddharth? Do you track one?
We don't track this company.
All right.
Okay, but with this is wrapped to the rapid fire session. With this, we'll like to thank Kunal and Siddharth for joining us today on ET Now and helping all our viewers with their stock related queries. But with this, it's time to slip into a short break, but don't go anywhere. We'll be right back.